Hi, good day to all. Welcome to this week latest weekly technical outlook on the major stock indices for the week of 26 April to 30th April 2021. Okay, before we start over here, let's take a look at the disclaimer slides first. All right. So let's take a quick recap on last week's performance on the major stock indices across the globe from US, Europe to Asia for the week of 19 April to 23rd of April. So what we could see is that in the major US stock indices, it's a kind of a consolidation week for the S&P 500, almost unchanged. In fact, a minor loss, negative 0.13%, the Nasdaq 100 negative 7.2%, and the Dow Jones average negative 0.46%. So all in all, what we could see is that last week relatively weaker performance versus its prior week. It's actually due to this President Biden corporate tax on the ultra high net worth individual, where he decided to bump up the tax rate to almost double from around 20% to 40% on any individuals earning 1 mil and above. Pardon me. So, but one thing positive over here is that the single day losses on Thursday has been recouped back almost entirely on last Friday. So that's give rise to a kind of a minute negative losses performance for the week ended 19 April to 23rd of April. And one thing positive I'd like to highlight will be the Russell 2000, which comprises on the smaller caps US stock. This particular index has been underperforming in the previous 4 weeks at negative 0.26%. So in fact, it managed to actually stage a relatively good performance at the end of last week with a gain of 0.41%. All right, but slightly below last its prior week performance at 0.86. And another thing positive to note will be the Asia indices, especially the ones, those two that are linked to the China related stocks, which is the Hang Seng Index. The Hang Seng Tech Index, which comprises of the China big tech companies like Alibaba, Tencent, Meituan. All right. So as you know that since this we call it after the Chinese Lunar New Year break, the China related stock market and also the China stock market itself has been underperforming the rest of the world against the whole world. Two primary reasons. One is due to the number one, the China policymakers rhetoric against this stance on we call it their local stock market is getting too hot, and secondly also due to this anti-monopolistic policy that's being imposed by China big tech companies like Alibaba and Tencent. But if I were to look from a technical analysis perspective, it seems to me that the worst is almost over, very high chance in terms of the odds right now. Why? In terms of the raw performance rise in momentum, the Hang Seng Index has been improving tremendously in the last 2 weeks. So if you look at the now, the prior 4 week average has been become almost unchanged. Its prior last week performance at 0.38%, slightly below its prior week at 0.94%. And the worst hit, which is the Hang Seng Tech Index, has become now last week best performer across among its global peers at positive 2.86%, above its prior week performance at negative 0.89%, and also its prior 4 week average at negative 87%. So do take a close watch on the China related stocks, which in terms of the probability wise seems to be starting to scale towards a revival of its potential upside movement going forward in the coming weeks. So Nikkei 225 which is the Japan index, continue to consolidate negative 2.23% versus its prior 4 week average of negative 0.08%, and its prior week which is at negative 0.28%. Later I'll share with you the technical configuration of Nikkei 225. Despite its last week lackluster weekly performance, in fact, is now coming towards the tail end of a symmetrical triangle performance, symmetrical triangle range configuration, where we may be due for a potential bullish breakout in this coming week ahead. Then pretty much unchanged for the German DAX itself, negative 1.17%, below last week performance of 1.48% and below its prior 4-week average at 1.1%. So yeah, even though the raw momentum numbers looks kind of lackluster, but however, later I'll share with you on the technical chart itself, on the daily and the 4-hour chart. Actually, the medium term uptrend still pretty much intact, holding above its medium term pivotal support. Now, let's take a look at the 11 sectors performance. That means right now what I'm going to do is that for the S&P 500, I'm going to slice it up into its 11 sector. Why I'm doing so? Because it's to share with you, where is there any, what I call that, as you all know, that a healthy medium term uptrend, we need to have all the sectors that is varying together. So I want to see whether do the S&P 500 has such characteristics rather than only a few sectors that are leading the fort. So in fact, right, if you look at the 3 months performance, that means it's a kind of a rolling 3 month performance till 23rd of April, last Friday. So what we could see over here is that the financials, which is the outperforming sector right now for the rolling 3 months, plus 16%, followed by the industrial 14%. So these two are cyclical plays, which we have been mentioning in my outlook, Q1, Q2 outlook, that we are still in favor of cyclicals outperformance. And one thing to take note is the surprising is the real estate, which is one of the defensive sector that is now trying to actually go into the leadership board of outperformance at plus 15%. So it was not actually seen this part of this leadership board since in Q1 this year. So energy has been kind of a consolidating or profit taking mode since the start of Q1, but right now it managed to slowly climb up the leadership board again at plus 12% or 13% or so. So now trying to trade above the 3/4 mark towards this 3 months price range. Okay, so slightly, pardon me, it's slightly above 50% of this 3 months price range, and it's trying to work its way up towards the 3/4 mark over here. So nothing too scary on the energy index. So to me, on the technical chart itself, it's more like a profit taking scenario since the start of Q1, rather than a kind of a bearish reversal for the energy sector. So in fact, the information technology sector that has been underperforming since Q4 last year has been slowly recovering some lost ground, which is positive at plus 712. Why? Because as you all know that information technology uh, consists of various big cap stocks. I would say technology big caps like the FANGs, we talk about Facebook, Amazon, Netflix, Google, as well as Apple and Microsoft. So all these are heavy weighted stocks on the S&P 500. So definitely we do not want them to see them having a kind of a very pronounced negative performance, which could drag down the entire market. So all in all, what you could see is that yeah, even though they are still underperforming the financials, the real estate, the industrials, and energy, but at least they are in the green, and right now they are actually trying to actually make up for some of their lost ground in their underperformance in Q4 since Q4 last year, to actually now trade close towards the 3 months price range, which is a positive sign for the overall market. All right, so now taking a look at the longer term perspective, that means we talk about year to date till 23rd of April. So we could see that the energy and the financials and the industrials, they are actually the market leaders right now. Then what's surprising is the real estate sector that has started to shoot up in this leadership board at 15.86%. Information technology trying to make some loose ground at plus 9.36%. So we could look at the sector's performance in terms of momentum from the 3 months till 20th of April and year to date till 20th of April. All in all, we are not seeing signs of a major to medium term distribution. That means we're talking about the major uptrend, and the media uptrend of the US stock market still remains pretty much intact. All right, now taking on going forward, that you know that this is the third week of the US Q1 quarterly earnings. So this week will be pretty much crucial or significant. Why? Like I said earlier on, that the US big cap stocks has a significant weightage on the S&P 500, especially on the Nasdaq 100. So on Tuesday itself, we have Apple. Then after that, on Microsoft after the market close, and all in all, we also have these top EV stocks like Tesla announcing at Monday after the market close as well. Then followed by these two semiconductor, we call it the chip maker, a major chip maker in US, Advanced Micro, on Tuesday after the market close, followed by Texas Instrument on Tuesday after the market close as well. Then the next big cap, next US big tech stocks they're going to announce will be Wednesday after the market close. This will be two. You have Apple and Facebook. Then another big player on the EV market will be NIO. This is the Chinese, I would say the one of the big China EV car maker listed on the US. They will announce at after the close of the US market on Thursday. Then followed by Amazon as well after the close on Thursday. Then going to Singapore will be one of the big banks, local banks, DBS, the first to kickstart its Q1 earnings on Friday before the US stock market open. Pardon me, on Friday before the Singapore stock market open. Pardon me. So all in all, what we could see that this week is a pretty much a significant earnings weeks where we have major US stocks across the board, across several industry, from the chip maker to the EV space, and as well as the US big tech company, and followed by one of the Singapore local major banks. They're going to announce this week in their quarterly earnings. Right. So now going forward to the market over here is where I'm going to share with you all the individual technical analysis chart of the various major stock indices that we cover on a weekly basis. So first to start off is I always like to look at one of the growth proxy, which is the semiconductor industry, stocks in short. This is the ETF that is listed on the US stock market, SOXX. So it's actually a measure, a basket of key US chip makers. All right, so we could see that last week we highlighted intermediate support at 42250. Then definitely the key medium-term pivotal support remains no change at 392.50. So last week it actually did a slide and tested this 42250, didn't break above it, then managed to shape a rebound on last Friday. So this was the Thursday sell off that is related to this negative news flow from US President Biden double up tax on the US wealthy individual. So all in all, right, the firstly the major uptrend remains intact since 18 March 2020 low, trading above this ascending channels support as well as the 100-day MA support. So what we could see here is the RSI still remains relatively positive, bouncing off from the 50 level mark, and as well as the corresponding key support level at the 43 level slash 37 level. So no change with 39250 as the key medium-term pivotal support. So as long as this level holds, I'm still expecting a slowly a potential up movement to actually test the next resistance at 4580. Above it should take us up to the top of the channel, as well as the 1.236 Fibo expansion level at 495 resistance. So all in all, the medium term uptrend still remains intact on the semiconductor in the ETF, which should translate to positive bias for the major stock indices in terms of their medium term trend perspective. Okay, so now let's start off with the S&P 500 first. Okay, so on the S&P 500, let's take a look at the higher time frame, which is the daily chart. So if you go to the daily chart over here, the picture is still pretty much unchanged since the bullish breakout of this former expanding wedge resistance that is in place since 2018. It actually broke out on the on the early December last year. So ever since then, it managed to actually held above this key level and start to trade a series of higher low, holding above the 50-day moving average after a test on it previously, and also this ascending channel support since the major uptrend started on 23rd of March 2020 low. So all in all, right, we still see pretty much the major uptrend, which is depicted by this ascending channel from 23rd March 2020 low, as well as the low of this 30th of October, which actually depict the medium term uptrend. Okay, so all in all, these two uptrend phases from the medium term as well as the major time horizon, all in all still remains pretty much intact. So last week, yes, it did a bit of dip from its overbought level, which is the daily RSI, which means that it's trying to work out from its a kind of a excess upside momentum. And what's so good over here is that this RSI managed to stage a rebound from this significant pullback resistance former pullback resistance now turns into a pullback support around at the 60 level mark. So all in all, right, medium term upside momentum still remains intact, which is supporting further potential upside movement on the S&P. So now going to the strategy chart, that means we're talking about the chart, the strategy for this week. We're talking about 1 to 3 weeks perspective. Is what I'm going to do is I will tidy up the medium-term pivotal support. Still recall that last week we have two potential resistance target that our upside target we got to watch will be at 4200 slash 4220, followed by 4280 slash 4300. So still no change as the price of this S&P 500 slowly churn higher. If you look at this was last Friday push up from this previous Thursday sell off induced by this President Biden proposed tax on the wealthy. So what we could see here is pretty much bullish price movement. RSI also shaping a higher low on the 4-hour time frame. So what we could do is I will actually tighten the medium-term pivotal support to 4090. So what's 4090? In fact, 4090 is actually the this previous minor congestion zone here, also confluencing with the lower boundary of the short-term medium short-term ascending channel in place since the low of 5th of March, and as well as very closely to the 23.6 Fibo retracement taken from the low of the last swing low, significant swing low. Why I do say this significant swing low? Because prior to this swift upside movement, we start to see this previous consolidation zone from 18th of March all the way down to 26th of March. Then thereafter it starts to actually shape a very clear higher high and higher low. So this is a last significant swing low, project all the way up to last Friday high. You see very close to 3.6% over here, okay, which is very close to the 4090 level medium term pivotal support. So what I do is that I tighten this week medium term pivotal support to 4090, still looking for a further push up towards this 4200 slash 4020 level. Above it sees 428 slash 4300 level on the S&P 500. Okay, now moving on next to the Nasdaq 100, which is pretty much interesting this week. Why? Because for this week, as you all know that we see this mega big tech earnings from Microsoft, from Apple, Amazon, Facebook. Okay, so there as well as Microsoft. So these are heavily weighted top four component stock of the Nasdaq 100 that could actually drive significant movement on the Nasdaq. So let's take a look at the technical chart of the Nasdaq 100 starting from the daily. So on the daily chart, we could see that still remember 4040 is my key kind of a upside trigger level that I have last week. So in fact, last week it actually tested the level since the start of the week, and it starts to do a bit of sideways movement. So what I could see over here is the way it consolidates more like a pullback rather than a distribution phase. Going by distribution phase can be a sign of double top formation or any of the chart pattern that are showing topish scenario like ascending wedge formation. So all in all, there's nothing pretty spooky over here. Just a bit of pullback or consolidation of 1 day, 2 day, 3 day, 4 days below the 4040 key upside trigger level. So the 50-day moving average is at around 13,170. And what's interesting over here is that last week pullback has led to the daily RSI to actually bounce off from this corresponding ascending trend line support at the 57 level mark that managed to link up the previous higher low as this RSI slowly start to shape higher low since the 5th of March. All right, so all in all, what we could see is that the medium term upside momentum still remains pretty much intact on the Nasdaq 100 index. Now going for the strategy chart, right? So if you could recall last week, I did mention why I turn more have bullish. Why? Because of this clear inverse head and shoulder bullish breakout over here. If you could see the short-term momentum as depicted by the 4-hour RSI, last week it managed to stage a breakout from this former descending resistance. All right, then holding above the 50 level, showing a higher low. All right, from as it started to push up last week. after this pullback that causes it to actually fall into of the oversold region. So what we could see here is the short-term momentum also has starts to improve and start to pick up, and has yet to go to the overbought region ahead of the big tech's earnings announcement that I highlighted earlier on. So what's positive over here is that the rebound that took place last week after the we call it the wealthy tax induced sell off managed to actually bounce off right at my intermediate support that I highlighted earlier at 13730. Because it haven't break above the 4040 upside trigger level, I don't want to tighten the key medium term pivotal support to 13730. So I still remain pretty much unchanged last week at 13,607. So 13,607 will be my key medium term pivotal support, looking for a bullish breakout from 4040. So if we have a daily close above 4040, we could start to see a further potential upside move to target 14,435 slash 14,460, which is so confluence with the exit potential of this bullish inverse head and shoulder bullish breakout configuration. All right, and also the 1.618 Fibo expansion level as well. Okay, on this 14,435 slash 14,460 mark. So overall, still bullish bias still remains intact, or the S&P 500 and as well as the Nasdaq 100 index. Now moving on to Asia will be the Hang Seng Index, or the Hong Kong 50 Index, we call it in our platform. So still pretty much unchanged. Let me remove this. All right, so that's much clearer. Okay, so overall, right, on the 4-hour chart, still pretty much unchanged as it's try to trace up this impending bullish inverse head and shoulder formation that has taken shape since 9th of March. All right, and one thing good is that the 4-hour RSI still remains above a significant support at the 40 level. Okay, 40% level. So still no change as you try to actually this morning it actually tested the neckline resistance of this impending bullish inverse head and shoulder formation again before starts to actually pull back slightly. So the trigger level right now is 29,270. So overall, since this level is not being taken up, that means it's trying to actually converse in this impending bullish inverse head and shoulder. Last week sell pullback managed to actually stop very close to the intermediate support that we highlighted earlier, 28,400. So given that is the inverse head and shoulder formation hasn't been taken out on the upside yet, so I will not tighten my key medium term pivotal support, still remains at 28,100. So 28,000 will be my medium term pivotal support. Still looking for a bullish break above 29,270. So at least we could have a daily close above this level, so we'll be more confident to see a further up move to test the next resistance at 30,140, followed by this 30,760 slash 31,080, which is this former swing high area of 18th of Feb. That means this was the level that has took place right after the Chinese New Year break, where we start to see this sell off. All right, but all in all, what we could see is a very positive price movement that has been building up on the Hang Seng Index. So still looking for a daily close above 29,270 to reinforce our bullish view, at least from a multi-week perspective. We're talking about 1 to 3 weeks perspective for a potential push up to retest this 18 Feb resist swing high area of 30,760 slash 31,080 level. All right, so now moving on next to the next Asia index down the highlight to your will be the Nikkei 225, or the Japan 225 that we call it in our platform. All right, so while waiting for the price action to load, another thing to highlight for this week is there are actually two major macro events that we gotta keep watch. Will be number one, related to this Nikkei 225 or Japan 225, will be BOJ Bank of Japan monetary policy decision that is out on this Tuesday at around 11 a.m. And they also released their latest quarterly outlook on their key economic indicator in Japan. So close eyes to watch as well. There another macro event will be the U.S. Federal Reserve FOMC meeting that is out on Singapore time this early morning Thursday at 2 a.m. Then followed by the Fed Chairman Powell press conference at 2:30 a.m. So this particular FOMC meeting is relatively should be a non-event. Why? Because in this meeting they will not release their latest U.S. economic projection, which is the dot plot they call it. So usually only changes in we call it major monetary policy changes only coincide with the release of the U.S. Federal Reserve dot plot projection. So since this particular meeting on Thursday, we will not expect to see any release of the dot plot. So hence, I still expect a pretty non-change in terms of monetary stance from the Fed. So, but except that, do keep a close watch on Powell press conference to see him how he handled the situation, the current global inflation situation. All right. So now going to the Japan 225. So still no change in the Japan 225. Still inside this symmetrical triangle range configuration since the high of 16th of Feb, which is at 30,716. So this 30,716 is pretty important. Why? Because this is close to a 31 plus year high on the Japan 225 index. That means a level that was not met since 1991. That was around the prior property bubble burst in the Japan at that point in time. So still inside this symmetrical range configuration. But what interesting is that last week sell-off managed to bounce at the bottom of the range. All right, the bottom of this symmetrical range, and confluencing with the bounce on the significant horizontal support on the RSI as well at the 39% level. So if I were to zoom in on the 4-hour chart, right? So if you will start to see, you will start to dissect, right? Over here is that since this is the high 13,750, 16 of Feb. So if you look at the Elliott wave and the fractal analysis perspective, right? This could be okay. This is how a symmetrical triangle evolve in a 5-way sequence: A, B, C, D, E. So this has already completed the E wave, and if you could see, the E wave has led the 4-hour RSI to be its extreme oversold condition, the most extreme oversold condition at 15% level, comparatively to the previous test on the lower boundary of the symmetrical triangle. All right, as you can see over here. So what it means that over here is that potentially, in terms of the Elliott wave and the fractal analysis approach and the 4-hour RSI momentum study, the odds now has starts to favor a potential end of this symmetrical triangle. That means A, B, C, D, E wave ended, where we will start to potentially see the start of another impulsive upleg. What do you mean by impulsive? Impulsive upleg is looking for a push up to break above the previous swing high at 16th of Feb. That means what we are seeing now is we may be eyeing the potential bullish breakout of this symmetrical triangle range. Okay, so with that, right, still I'll be much confident to maintain my bullish bias. So it has really finished the E leg of this symmetrical triangle bullish symmetrical triangle range configuration at 28,300, which is the key medium term pivotal support, and I'm looking for a potential breakout to actually materialize. So definitely if we have a daily close above 30,000 230, which is the upper boundary of this symmetrical triangle range, also that confluence to this horizontal resistance that is in place since 25th of Feb. A daily close above it should take us much higher towards 30,075, followed by the next resistance at 31,350. Okay, so all in all, watch out for a potential bullish breakout of this symmetrical triangle range configuration for the Japan 225. Okay, now moving on to the last index will be the German 30. So as you could see is that yes, even though in terms of the raw momentum that I highlighted earlier at the start of my this video is the German 30 index has kind of underperformed. I mean, it's the kind of worst performer for last week. But if you look at the clear technical picture on the daily chart, nothing pretty scary. It's just a pullback. We in a very strong uptrend, a medium-term uptrend that is taking shape since 30th of October 2020, where it shaped this bullish breakout, all right, on the 18th of December. So what we could see is that the medium-term uptrend of 30th of in place since 30th of October last year still pretty remains intact. No signs of a distribution formation like ascending wedge formation or double top formation, or kind of a head and shoulder pattern to form. So what we could see is a kind of a pullback that's all in for last week, holding above the 50-day moving average at 40,800. All right. So, and also what you see is that very interestingly, the RSI managed to actually work out from this overbought region previously to actually shape a bounce from this significant support level at the 58 level, which is confluenced by this ascending trendline support that I draw from the 30th of October, and this former horizontal resistance turns into a pullback support at also confluencing at the 58% level. So all in all, what we could see is that medium term upside momentum remains intact. No signs of a medium term distribution to actually say that this medium term uptrend has already reversed, that is in place since 30th of October 2020 low. So now, interestingly, going to the 4-hour chart, which is a strategy chart, last week we have a tightened medium-term pivotal support at 15,070, and what we could see is that this medium-term pivotal support is actually acting as a clear inflection point. What I mean by clear inflection point, price action indeed pullback and shape a strong bounce up from here. What I mean by strong bounce, if you could take a look at the 4-hour bullish hammer that is being formed after it actually tests very close to at 15,070. So indeed 15,070 was a inflection point that we derived much earlier in our weekly outlook last week. So still no change, definitely 1570, given that it's a significant price rebound that was since last week, from this pullback from its all-time high of 17th of April. So 15,070 will be my key, still remains the key medium-term pivotal support to maintain our multi-week bullish bias. We talk about 1 to 3 weeks bullish bias or medium-term outlook, we call it. Still looking for a further potential impulsive up move to actually break new all-time highs, or to actually make record highs at 15,530 slash 580. Then thereafter a break above this level, which should take us up to much higher at 16,070 level, which is being defined by a confluence of different Fibonacci expansion cluster level. Alright, so all in all, right, what we could see right now is that this week will be pretty much pivotal from a earnings perspective. Two micro event risks to actually take note of will be Bank of Japan monetary policy decision out on this Tuesday, pardon me, at Singapore time 11 a.m. Then followed by the U.S. Federal Reserve FOMC um, outcome will be at 2 a.m. Thursday, and followed by the Fed chairman press conference at 2:30 a.m. on this Thursday as well, Singapore time. So overall, the medium-term outlook for the major indices that I cover in this video still remains intact on the bullish bias. No change, except that I will actually tighten or tidy up the key support level on the S&P 500, and the rest I will remains unchanged. So with that, have a great trading week ahead. This is Kelvin here, and I see you all next in my next video.